Good morning, students. We are on chapter number 6 of account part 2, and today in this lecture we are going to know about how to find cash flow from operating activities. So, for today our topic is cash flow from operating activity. Cash flow from operating activity is prepared on the basis of number 1, details of profit and loss statement and appropriation of profit. Second, changes in current assets and current liability, that is change in working capital. The cash flow from operating activity means the cash flow generated from day-to-day transactions of business entity. Details of profit and loss statement and appropriation of profit. Along with details of profit and loss statement, details of profit and loss appropriation are also included. Profit and loss appropriation statement is extended form of profit and loss statement. So, what is profit and loss appropriation statement? It is a extended form of profit and loss statement. Details of this statement can be classified as follows. Details of profit and loss statement and appropriation of profit, that is what? Incomes and expenses. And incomes are classified in two parts, that is operating incomes and non-operating incomes, and expenses are also classified in three parts here, that is operating expenses, non-cash transactions and financial expenses. The difference of above stated income and expenses is known as profit. Yes, we know that the difference of total income and expenses is known as profit. In this profit, non-operating incomes and non-cash transaction and financial transactions are included. Now, let us talk about all these three: non-operating incomes, non-cash transactions and financial expenses. Due to non-operating incomes, profit increases, so they are added. Due to non-cash transaction, profit decreases, so they are deducted. And due to financial expenses, profit decreases, so they are deducted. To determine cash flow from operating activity, above stated items of profit and loss statement will be given the reverse effect. Reverse effect, that means the things which are added will be deducted and the things which are deducted will be added to the profit. So this is the specimen, one kind of specimen of cash flow from operating activities. We have earlier also discussed about this. Once again, let us see profit of current year as per the profit and loss statement, that you will be writing in second column of amount, and from that non-operating incomes will be deducted, non-cash transaction, that is expenses and appropriation, will be added, and financial expense will be added, and a sum of all these three will be written in the second column, and accordingly the amount will be found. The cash flow, the result will be cash flow from operating activities before changes in working capital. Okay, friends. Now, let us talk about what is non-operating incomes. These are such incomes which do not arise from the business in which company deals. They are not part of operating profit, thus they are not considered for computation of cash flow. What can be the example? Profit on sale of investment, profit on sale of asset, interest on investment, dividend received on investment, rent for properties, etc. What are non-cash transactions? Appropriation and provisions. There are two types of non-cash transactions. These transactions are generally considered in reference to the expenses. Non-cash transactions, appropriations and provisions. Out of that, operating transactions, depreciation, return of intangible asset, amortized, fictitious asset, written off. And non-cash transactions, that is non-operating transaction, that is appropriation and provisions, that is which are loss on sale of assets, taxation provision, transfer to general reserve, proposed dividend. So these are all non-cash transactions. These kind of transactions do not generate cash flow, that is receipt or payment. Thus, to determine cash flow from operating activities of cash flow statement, these are ignored. All these transactions will be added back because these were debited to profit and loss account. So simple friend, from the profit of current year you have to deduct the non-operating incomes because they are not operating expense. We have seen the examples of those incomes, non-operating incomes like profit on sale of investment, profit on sale of asset, interest on investment, dividend received on investment, rent for properties, etc. So they are deducted from profit of current year, and then non-cash expenses are added back because they are non-cash, they are not paid in cash in real, so they are added back to the profit, which can be depreciation written off, intangible asset written off, that is amortized, fictitious asset written off. Also appropriations and provisions, that which can be loss on sale of asset. Loss and sale of asset is one kind of non-cash transaction. Taxation provision, transfer to general reserve, proposed dividend, etc. Right? Let us talk about the next thing, that is financial expense. What are financial expenses? Amounts which are paid as a return of capital are financial expenses. Capital is of two types: owner's capital, borrowed capital. Dividend is paid on equity share capital and preference share capital, which are owner's capital, while interest is paid on debt. Dividend and interest are expenses of capital, thus it is financial expense. Thus, to determine cash flow from operating activities of cash flow statement, these are ignored. Those are deducted from profit and loss statement and appropriation, so they are to be added back. So friends, financial expenses which are generally written on capital, or and that capital may be borrowed or ownership capital, equity share, preference shares, borrowed capital like debenture, etc. On that, whatever return is given in form of dividend or interest are called financial expense, and they are added back to determine cash flow from the operating activity. Then changes in working capital. Changes in working capital. During determination of cash flow from operating activities, the effect of changes in current assets and current liability, that is in working capital, are considered. The effect of increase or decrease in current asset, decrease in current assets and current liabilities are recorded. Cash and cash equivalents are not included in current assets. Its separate effect is given in cash flow statement. Relation of cash and cash equivalent with the current assets and current liabilities. Friends, current assets and cash equivalent has inverse relation. That means if there is an increase in current asset, there will be a decrease in cash and equivalent. And if there is a decrease in current asset, there will be an increase in cash and cash equivalent. Okay. Now, current liability and cash equivalent are having direct relation. That means increase in current liability, there will be increase in cash and cash equivalent, and decrease in current liability, there will be decrease in cash and equivalent. So these things are considered while finding cash flow from operating activities. Once again, I would like to revise here the things which we have to consider. First of all, current year profit is taken, then non-operating incomes are deducted from them, then non-cash transactions are added, that is non-cash transactions, provision and financial provisions, and then financial expenses are added, and we get operating profit before changes in working capital, and then after changes in working capital is recorded, where decrease in asset and increase in liability, decrease in current asset and increase in current liability is added, and increase in current asset and decrease in current liability are deducted. Then we get operating profit after changes in working capital, and finally tax paid for previous year is deducted, and we get cash flow from operation or cash flow from operating activities. Stages for computation of cash flow from operating activity, as I have just discussed with you, ascertain the difference of closing balance and opening balance of profit and loss account or reserves and surplus. Show this difference as the first item of statement. It is profit of current year. As I said, that profit of current year we have to take first. Then add all non-cash transaction to the profit of current year, all non-cash transactions of current year. Then add all financial expenses to the profit of current year, and then deduct all non-operating incomes from the profit of current year, and take or consider any adjustment if given, if it influence the operating cash flow. Okay friends, so this was all about how to find the cash flow from operating activity. In the next lecture we will be doing practical sums based on this from our exercise. Thank you.